Hello, everyone. Let's take a look at what's going on in the U.S. markets. The Dow Jones, flat right now. No real changes. The S&P has pulled back a little. It had fallen further earlier, but buyers seem to think prices have dropped enough, and they're stepping back in. We're also seeing some positive divergence signals here. The Nasdaq has fallen a bit more, but it's now in oversold territory. There, too, positive divergences are showing up. It looks like funds that missed the last rally are just waiting on the sidelines, hoping for a dip so they can jump in. That's why I don't think Nasdaq will fall much further, at least not over the next week or two. So if you're asking, is it still a buy? In my opinion, yes. It's still worth considering. For stock-specific analysis, check out my video from yesterday. I covered that in detail there. Let's move on to crypto. Conditions remain tough, but my overall view hasn't changed. I still expect one more rally in September, likely into the third week of the month. But if critical support levels break, then it may be smarter to step aside, lock in what you have, and wait to re-enter at lower prices. Here's the logic. Take the super trend level at 112,500 as your stop. That should be your safety line. If you stop out and prices recover, you'll have to buy back higher, maybe losing 1 to 2% in the process, plus commissions. But if you don't stop out and the decline extends 5 to 10%, you'll be stuck in a losing position that's much harder to recover from. That's why I see stop losses as a form of insurance. You hope you won't need it, but when you do, it saves you from much bigger losses. And let's be clear, a stop means exiting completely. It's not about selling part of your position. It's about cutting risk. If you're trading on the 2-hour chart, wait at least 2 hours for confirmation. On the 4-hour, give it at least 4 hours. For now, I'm not recommending fresh Bitcoin buys. 112,500 is the key level to watch. It could bounce from here, but unless it breaks above 117,000 and holds for at least 4 hours, it's too early to add positions. Ethereum requires extra caution. It's been one of the best performers, which means selling pressure is higher. The 4110 level is critical support. Below that, you need to stop out. It may still bounce from these levels, but for a safer entry, I'd wait until it clears 4430. Ripple is weaker. The levels I had flagged earlier have already broken, so technically it's shifted to sell mode. If you saw it failing to hold above 293 to 295, you should have already been stopped out. Again, it's about insurance, not predictions. The U.S. 10-year yields have pulled back to the moving average and bounced. That's a healthy sign. For those interested, this is a decent spot to consider TLT.
Silver's been choppy, a little up, a little down. In this environment, I'm not recommending either buying or selling. In other words, it's best to stay on the sidelines for now. The big wild card here is geopolitics. President Trump is pushing hard for peace talks in Ukraine. He already helped broker an agreement between Azerbaijan and Armenia, and now he's aiming for something similar between Russia and Ukraine. If he succeeds, gold could face heavy selling pressure, which would also hit silver. Silver, however, usually bounces back within a few days, while gold often takes longer. So, here's the takeaway. Silver is not a buy right now. If peace talks fail and tensions flare again, gold will climb, and that would create another entry opportunity for silver. But at the moment, with geopolitical risk this unpredictable, it's better to wait. Gold, meanwhile, has slipped below our sell level at 3,330 and is currently around 3,318. That's not a buy zone yet. If it dips further into the 3,280 to 3,250 range, then we could start talking about a new long entry. But right now, I'm not recommending fresh buys. That's it for today's update. Thanks for watching. Don't forget to subscribe and hit the like button, and I'll see you in the next one.